Kim here. Welcome to the market update. Today is September 21st, 2018, Friday. I am recording this intraday. Market should be open under an hour and a half as I record this video. So you should be seeing some little bit of flashing lights on your left. Today we're going to be looking at Diamond, Spider, Russell, the Qs, and SLF, and we'll call it a day. I hope you guys had a good week trading this week. Let's start with the Diamond because Diamond truly was the star this week here, and a lot of people doubted Diamond. A lot of people said that, you know what, the Dow's lagging, Dow Transportation, the Dow Jones Industrial Average, they're supposed to confirm each other, and if they don't, the crash is gonna come. The Dow has made a new all-time high. All kinds of BS, you know, theories. People are saying that that this was a weakness, and you can see now they got nothing to say because Dow, ladies and gentlemen, has printed new all-time high as of yesterday. So now every major market indices have now printed new all-time high, including Dow. We got the Dow, we got the S&P, we got the Russell, NASDAQ. All these guys have made new all-time high. And all the major indices that I haven't mentioned here, they also have created new all-time high. If I remember correctly, NYA, New York Stock Exchange Composite Index, is the only index that has not yet made new all-time high. Other than that, everything has made new all-time high. And it wasn't just, you know, market coming down and going right back up creating a new all-time high. A lot of these indices has built the base before it went up and made new all-time, meaning it took its time to digest its gain. It means it is ready to resume to its primary term uptrend. You know what that means if you've been following me long enough, right? So Diamond here, you can see that, you know, it's interesting to note that Dow has filled this down gap, which was open since, you know, January 1st, right? That gap was open really for about 8 months here. And really that was the sell pressure that bears have opened. Ever since then, it has been difficult for the bulls. However, the bulls took its time and built that base, finally broke out of it, and then filled that. And a lot of times these gaps gets filled, it does act as, you know, minor term, short term resistance. It happened right here. You can see that this gap, right? This gap was filled right there. And then the market did see, Dow did see about week and a half of a pullback before going back up. And this gap was filled, but this time around, Dow was like, you know what? I don't even want to deal with that. I don't even want. And at the time, we had this rising channel, or this is you can call this more of a rising wedge pattern, right? You guys remember what do these cheat sheets say that you see on Twitter that goes around? These gurus and experts, they like to say, oh yeah, print this and put it on refrigerator. What did I say? Burn it. Burn those cheat sheets, right? Burn those cheat sheets because they never work. If the market is that easy that you can have a cheat sheet and you're gonna make all your money, you're gonna make millions with the cheat sheets. No, it's not gonna work. Burn those things. And anytime in these gurus tweet it out and talk about it, unfollow. But anyway, so we had this gap, right? And this is maybe some people even trying to trade it that way. We got that gap here, coinciding with this rising pivot / resistance, which also looks like a kind of a rising wedge. So before this gap up, if some bears trying to be cute about it, is they're like, you know what? That's a bear signal. We got the gap fill, we got this rising, you know, wedge and rising pivot resistance in that vicinity, and they're gonna say, well, it's extended, right? So therefore, we should see a pretty sized pullback, and then probably and that's probably some kind of analysis somebody have done, and then they're hoping to get into some puts and waiting for this pullback, right? And this is a reason why you always want to give benefit of the doubt when the trend is higher, right? Looking at things more than mind. Yes, we had this rising wedge resistance here. Yes, we just filled the gap. But do you understand that we are still in a minor to intermediate term uptrend? We were still, the market, we've been seeing this buying pressure, right? So sentiment is bullish. And even though we have maybe potential bearish or resistance in this vicinity, we have to want to give the benefit of the doubt to the buyers. And then what happened? We gapped up. And I don't think I've ever seen this where, because I've seen a lot of like, it will gap above the gap and you'll see an island reversal type of deal. I think this is first time I'm seeing this since in my trading career, where it fills the gap and then gaps up next day. And sizable gap. An almost equal size gap. I mean, that gap, this gap, similar size. This is the first time seeing it. So, but because I gave the benefit of the doubt, I'm not surprised to see this. And I think this is a kind of a, like that authoritative, that gap up that bulls wanted to show to the bears that we are winning this battle, right? And they're probably going to continue to win. I mean, market is going to see up and downs, but this is a huge victory. This is something to celebrate about. Dow Jones have cultivated a new all-time high here, and we're holding up here. And the gap, this gap is now open and sustaining it for now as of today. But you can see this gap is still open, this gap is still open, this gap is still open, and that gap is open as of today. Remember what I said? And I'm always fair in my analysis. When these two gaps were open, and I talked about how these two gaps are going to make things hectic. Do you guys remember back in the day in February, March, that we need to fill these two gaps? And it took 8 months for the market, for the Dow Jones bulls to bring it back up to fill that gap. But within those 8 months, things were not easy because the downside selling pressure was coming off of that. But the opposite is true now. We have to be fair with that now. So in logic, with that logic, we have to say, you know what, we got these upside gaps, right? And these upside gaps been open quite some time, especially this is a pretty sizable gap. This gap is actually biggest gap because on this day, August 16th, we saw major indices all gapping up, but Dow gapped up the highest at that level at the time. I remember it was like, it was a pretty sizable gap. And this is the biggest gap. And that's what that was the jump start to bring up this price higher to break out of this major pivot level, right? So we got all these gaps open, and that is going to make things hectic for the bears, right? And so as long as these gaps open, I want to continue to give benefit of the doubt to the buyers. As of today, the sentiment is bullish in the minor term. Sentiment is bullish in the intermediate term. Sentiment is bullish in the primary term. I mean, sentiment is bullish. And with especially, Dow Jones actually created 8-month base before breaking out higher. Spider only did 6 months. And I think that's why Spider is now still under or bound by this rising channel. It has not broken out yet because it consolidated about 6 months. And I think because of that, maybe it broke out prematurely. Maybe it was a little bit more eager to it. But Spider has a little bit more sense. So those Spider advanced much more from the new all-time high. As of today, I have to say the overall general sentiment is more bullish on the Dow because not only we broke out of this, and you can also draw a trend line or channel line like this with a little bit of flop here, is because we've broken out of this while the Spider still bound by this channel. So I have to say, Spider still looks a little bit more vulnerable than Dow. And isn't that interesting how, it seems like just a couple weeks ago how Dow seems so far off. It seems like Dow is so laggy, right? It seemed like it's going to take a while for the Dow to ever catch up. But look at this. I mean, Dow is already 8% year to date while Spider's 10%. So it's only 2% away. But if you look at this chart here, Spider's still bound by this channel, the rising channel, while the Dow has broken above this channel, right? Yet with the gap up printing new all-time high. I mean, I have to say as of today, like Dow looks very healthy and looks much more stronger than S&P. So I think as long as we stay for, looking at things more in a minor to short term here, as long as we can have to stay above 265, 264, it'll be better to see this gap remains open. I want to see bulls protect this gap because this was the authoritative gap up, printing new all-time high and just putting a dagger into bear's heart. That's what this was. This was a statement. if we can able to hold this and even keep this gap open, it won't be end of the world if we do come back in, fill it. It's not going to be end of the world, but if we can have to keep it open, I think we can have to grind higher to my next target, about 278, 280 there on the spider. And we'll follow up on it next week and see how that plays out. Spider still bound by this channel there. We've been kind of grinding on that. 20 MA still rising as of today. Actually, let's do a little bit of maintenance here. We got this gap is actually open. Why my chart said that there's a long wick. That wick, there's no wick there, but we're still open there. The dividend was paid today, so that's why it's a little bit skewed, right? You can see that dividend was paid, so it's actually up, but it looks like it's gapping down. But so that gap remains open. And we got, obviously on Spider 2, we got this gap open, we got that gap open, we got that island gap there, we got these two gaps there. Yeah, we got some of those gaps there, so they're still all open there. So, but what we want to see is we want to see Spider finally breaking free out of this channel. The longer it stays, the vulnerability of Spider possibly coming back down to retest the bottom of this channel is gonna get higher. So either we break out quickly here, or we might move sideways a little bit, and then what could do is maybe sideways, and then instead of like pulling back, what we could do is maybe move sideways, like a consolidation, and then hit the bottom of this channel here, right? And then finally break out. So once it breaks out of this, the market is gonna go faster. Doesn't mean it's gonna go straight up, but it's gonna go much faster. It's been pretty lethargic, but it's been cultivating uptrend, and it's been much more docile. Something we talked about here. You can see these pullbacks were pretty severe. I mean, this was about a month of pullback, but ever since we broke out of this, I mean, the pullbacks were lasted only about a week. So it's much more docile environment. But I think once we break out of this, I think 300, 310 is very doable there. But Spider, let's see if we can hold that 292, 291 gap area. If we do feel it, we got 20 MA residing in that vicinity. So some of those levels, so 20 MA, 50 MA, 100 SMA, those are going to be very, very strong support should the price decline, you know, next week. But let's see if we can hold this gap, and we'll follow up next week there. Again, Spider, bullish in all sentiments, right? Bullish on sentiment. We're a little bit stretched on the weekly, so we may see some consolidation or something like that. So we'll follow up next week and see how that plays out. Let's go to Russell 2000. Russell 2000 hasn't been performing very well here just last couple of weeks. Looking at things more of a couple of weeks, you can see that we're retesting this phase and just been kind of, you know, grinding here. You can see that Russell 2000 12.3 still leading. Obviously, Nasdaq is a highest performance this year. But Russell 2000 was actually leading by quite a bit, but now it's been stalling here. But it's been just kind of grinding, kind of waiting for other indices to catch up. Remember, I don't know if you guys have been following me, watching these videos, that you know that I've been saying that why chase something like Russell 2000. This was on Russell 2000 thriving, right? Why chase Russell 2000, right? I've been saying that. Why chase Russell 2000 or the Nasdaq? Why not pay attention to lagging indices, lagging index such as Dow Jones, and why not pay attention to lagging sectors such as banks and energy and some of these other, you know, we also got XHB, the housing and or real estate or whatever that, or house construction or home construction. So that's why the Russell and the Nasdaq has been kind of lagging here. But we have a little bit of a bull pennant type of pattern. I don't know if it's going to play out or not. You know that I'm putting any faith into these short-term patterns. I'm holding all of my calls here that I bought down here. I did close out some up here, and then I'm still holding, and I bought some more there. And I'm holding those. But if this thing starts to pull back, and that could be a possibility. You know, maybe S&P is a little bit extended on the weekly chart. Maybe we see a little bit shakeout. If we do see something like that, and if Russell decided that he wants to punish the chasers, because a lot of times these chasers will start chasing Russell 2000. They're like, you know what, man, the Dow Jones has been moving, man. It's been lagging, so I'm going to put money out of there and put Russell 2000. That's how you get burned, right? Now you see Dow breaking out. Now you see banks breaking out. They're like, oh, man, the banks really weak. I'm going to take money out of the banks and put it on stocks that are moving faster. Now they're kicking themselves, right? Because banks has broken out. We'll talk about it in a little bit. So if this thing pulls back and shake more people out, that's when I'll be ready to possibly acquire some more long-term calls there. Qs, yeah, Qs haven't moved, moved in a while. You can see that Qs have not even made new highs here. Pretty much just hanging around this vicinity. It's not a bad thing. It's letting other index to kind of catch up. It's already made 18%, 18.59% year to date this year. We're still holding this rising channel, still bound by this rising channel there. That's not a bad thing. We're still in an uptrend. We got 20 MA holding. That's good. We got a little bit of gap here. See if that holds. We'll see how that plays out. One last one, let you guys go with this. XLF actually broke out of this base here. The base that has took about 5 months or 5 months or so to build. Look at this one. It's very funny. You guys remember that I tweeted this out back in late June, that all these gurus that you follow, right, or experts or wannabes, right? Gurus and experts and wannabes, they're like, oh my god, man, look at this, bro. Look at, I mean, have you ever go and kind of watch these people when they do analysis? I mean, this is kind of what they do. I mean, this is every week, this is what they do. Yeah, man, below here is bearish. Yeah, man, above here is bullish. Every single video, that's what they do. Yeah, man, below here, it's a little bit more bearish. Above here, a little bit more bullish. Yeah, oh, this right here, yeah, some kind of bull flag pattern. Yeah, oh, we got this. Oh, we just cleared this. Yeah, more bullish right there. Oh, yeah, above here, that's what they do, right? I mean, if you've been following me long enough and you know that if you don't know anything about it, you think like, oh, maybe that's a good recap. But probably after you follow me, you realize like that's kind of stupid. Like every single day, above here, below there, above here, below there. Not to be complacent about the market. Oh, you should be nimble. Like it's the stupidest thing that you ever heard, right? Anyway, so looking at the XLF here, it's like, oh my god, man, look at this, bro. Yeah, man, this support right there, man. Yeah, bro. You got this lower highs right there. Yeah, man. You got the lower highs, bro. Yeah, man. This thing is gonna tank. All hells break loose. Bye-bye, banks. RIP XLF. This thing is not going to end well. And then 2 months later, look at that. 2 months later, market just slaughters these people completely. And out of nowhere, we see that breakout, right? And look at this. And so you can see that we held this support. This is a level where 50 MA is residing. I mean, look at it. If I go zoom in here, 50 MA, was residing in that vicinity as well. We acted as support. See, 50 MA was acting as resistance here a little bit. It flipped back, supporting the bulls. We got back up here, 20 rising, 50 rising, 100 rising. And then it finally broke out of this kind of a 5 months base here. And then what's most important at this level? We have cultivated higher highs. Do you see this? Do you see that? Right? Higher highs. What is the definition of downtrend? Lower highs and lower lows, right? Now we got the low, we got the higher low and higher lows, and you had that base. We had that about 5 months base. We've broken out of that base. As long as it continues to cultivate and establish higher lows and higher highs, we want to continue to give benefit of the doubt to the buyers. Looking at things more of a longer term too, when I kind of go look at my other screens, banks look bullish. Banks look bullish. I think I don't have targets on these ones yet. I think I have targets on my other tab, but some of these levels very much doable. I'm not sure. I think for sure it's gonna make new all-time high before the year end. I think 31, 32 is also possible there. I think some of those are my targets. I also have longs or calls that I've been buying the dips here on the XLF, and I'm still holding full on those, and so we'll see how that plays out. And I did just a disclosure. I did close about 1/4 of my calls. Let's see here. Oh, I hate when my pen does that. Here yesterday about 1/4, and you guys know that on the spider. And those calls that I bought, those are leaps that I bought down here. I've been buying the leaps and buying the dips all year long. And I was holding full until I closed 1/4 here yesterday. And same with diamond. I've been buying diamond or here. You know what? Here I have it right there. just so that you know that I know there's so many gurus out there like, oh yeah, I bought it, but they have no evidence to show. A lot of times they just like to say things. So for those of you skeptical out there that actually did it, I'm up to, if you go to my blog at twotradersclub.com, you go to this title here, I'm up to part 3 now, but you can even go to my timestamp right there. As you can see, these are the levels I bought calls, and I closed about 1/4 there because I do believe that there's higher move coming, and all those trades are time stamped. If you hit these links, it will kind of connect to my Twitter, and they will all time stamped and at what day of the day that I enter these calls, which is gonna be confirming my claim that I bought calls at these levels and closed out 1/4, which was 2 days ago, right? 19th there, and you can always follow me at 2K Kim on Twitter for the updates of these, and if I get a new one going, I do post them there, in which we will have article alert if you put your email address in that vicinity. So I think that's it for me today. I hope you guys enjoy your weekend, and good luck trading next week.